We live, we live, we live. All right, good morning, everybody. We are now live. Welcome to the Culture Shock Investments live charting session. You know how we do. We're here to set levels, get you prepared for the week, give you a couple gems that you can carry with you through the week, and go over some news, see what's going on in the world of finance and economics. Of course, I always want to try to make it relatable and applicable for the Black community, because that's who I serve and that's who I want to accelerate in their growth of wealth. Let's break it down. Let's get it started with the company my boy G talked about. G, say what's up to the people, man.
What's going on, people?
Yeah. Nice. All right. So Nibius. We're gonna look at Nibius. I like Nibius. I think they have a a deal that just came out. What did it say? Let me see. BlackRock bought a good amount of Nibius. Let me see how much they bought again. How much you said they bought?
About 750 million worth or million? Million. About 750 million worth.
Let me see. BlackRock buys Nibius. Let me see what it says. 22 hours ago. BlackRock. Let me put this on the screen for you. I see BlackRock surges stake. Social media erupted over BlackRock's explosive increase in Nibius holdings, ballooning from thousands to nearly 10 million shares at an average cost of $83 a share. This position now tops $789 million. Woo! Fueling talk of awakening institutional interest in this AI infrastructure leader. Earning hype intensifies. Ahead of results, traders spotlighted robust call buying with over $1 million in net premiums, anticipating a $9 post-earnings swing on stronger revenue and EPS. So $9 swing up or down, we could check that. We could check on that expected volatility. I could pull that up on my market chameleon. Let's see what the expected earnings volatility is for Nibius. They already had their earnings. What was that, last week? They had it on Thursday. They beat on earnings. They missed on revenue. And they went from, 84 to 97. So the $9 push did occur after earnings. So if you played earnings, you benefited from that. Earnings came out, like I said, on Thursday. Like they had a nice dip on Thursday down to 84. But BlackRock bought a bunch of shares at $83. So I'm pretty sure that news helped boost the stock up, along with the earnings, pushed it up further the next time. So now people are getting like the stage for a nice little breakout potential from what I'm seeing. I had some levels on Nibius already on the weekly. Let me make sure these are weekly levels. Yeah, these are weekly levels that I'm looking at here for sure. So at the $98 entry on Nibius, I like them to ride up to this 102 area right here. I'm looking at this 102. Oh shit. The fuck? Yeah, what is going on? What is this thing reading? Okay, here we go. This 102 area right here. And then we're gonna look for 108. Now 102 to 108 may seem like a big gap, but when you look back at the weekly levels, you could actually get a wick in between. Let me see, because I had that set these levels a while back on Nibius. I haven't traded Nibius in a while. So on this most current run that they're on, I say you could look for 98.50 as an entry, ride that up to 102.10, and then 103.95, pretty much 104. I will look to see how it reacts between 104 and 108. That's a choppy range you could try to play, or you could get chopped up in that range. But once you clear 108, I like the chance for us to push to 111, and then really take that next push up to around 115 after that on Nibius. So the levels I'm gonna put for this week would be 98, 102, and 104. You know, we don't like to stretch it too far, but if you do want to swing something further out, I can see you getting like a 4-month out contract, 6-month out contract, and looking for that 115 price. You can probably find some nice prices on that right now. Actually, let's look at the option prices. Let's look at the option prices on Nibius right now. Let's see what they're asking for. If we go February, March, April, May, I'll say go. I like the May. Let's look at May contracts. May contracts to 115 is about $1,000 right now, which honestly to me is not that bad considering how volatile, how fast Nibius can push up. This contract could easily double in value if it gets in the money. If we push from 98 to anything close to 110, this contract will be worth around $2,000. If it goes in the money, once it gets above 115, strike price is definitely going to start pushing rapidly. The delta should increase. And then if you be in the money, once it gets to 125, you will be in the money. And what I like to do with these kind of things, I like to look at realistic stock prices. So I say Nibius, all right, has it ever even been to the my potential in the money price? So has it even been to something like 125 before? So that's the first thing I'll check. Yeah, it has been to 125. The high is 141. So this is a contract that can not only hit the strike price, but get in the money and run comfortably into the money before even testing all-time highs again. Yes, it's an expensive contract. $1,000 is not a little bit amount of money. But if you're out there trading a bunch of 0 days and 1 day contracts and trying to flip them day after day, you go back on your account and look back about a month and see if you haven't lost or spent $1,000 in the stock market in that time frame. You just made a lot more movement. You just did a lot more trades. So it makes you feel more active, makes you feel like you're doing more. But a single move, when you do the homework behind it and it has good potential, that one single move can outperform all those 20 trades you did throughout the month. And it's just from one sharp, precise analysis. Of course, you got to have your stop loss level set. We don't have our stop loss set. But if that stop loss never hits and we never have to close out our position, this position is more likely to be profitable than you taking 10, 15 trades. You know, you try to take 10, 15 trades in a month, you may hit on 1, 2, 3, 4, 5 even. But if you may even hit on 9, 10. But if you get hit back on the loss side on 5 of those trades, it could take away that whole game. So my mantra for this year, for everybody that's following the Culture Shock Discord, is trade less, study more, trade less. Okay? Study more, find your levels, find the companies you're very comfortable with trading, study them deeply and intensely, but trade less. You're not going to have to trade as much once you have that understanding because you know the ranges on companies very well. So Nibius, another thing I like about Nibius, if you look here on the weekly, they putting in a double bottom. So then when they came down to the $75 level on February 2nd, that was a double bottom. They put a first bottom in back here in December 2025, and then they retested it right here. And then you got us bouncing and retesting this resistance right here. This is the resistance we're about to test at 109. All right. Once we crack 109, good chance we hit this double bottom target up here, which is 147. Woo, boy, we go to 147. And we got those 115 calls. Oh, man. And those calls don't expire until May, the ones that we were looking at. So, yeah, it's $1,000, but you have it until May. It's February. All right, so you got the rest of February, March, April, and this expires May 15th, so half of May. This contract I will be looking to get rid of probably by April 17th, like middle of April, see where the contract's at. Or you get rid of it if you hit your target percentage that you're looking for. So I like 30% gains, or I like the price target being hit. Either one of those comes, I like taking profit on the position because nothing's guaranteed in the market. They give it to you and they'll take it right back. So once you get it, your 30% profit, get used to taking that. Take the money. All right. Hold on 1 second. I'll be right back. Let's see. Let's go to the ETF now. Let's go to my baby SPY. I like SPY and the Qs. SPY Qs, IWM. I was looking at some international ETFs over here. Don't mind that chart. Oh man, I gotta clean this up. There's a lot of levels in here. I gotta clean this up. Clean this chart up real quick. Hold on. What did I just erase? Erase the pattern. This eraser tool a little too powerful sometimes. All right. So the Qs and SPY are looking a little weak here on the weekly, but actually consolidating really. So I like to zoom out. Gotta get the macro picture. So sometimes you gotta go to the monthly to clean things up a little bit. So the monthly cleans things up a lot. You see, looking on the monthly chart, not so many candlesticks, not so much noise, and it makes it clearer that this is a consolidation. So you can see it a little better on this chart where you see we had this high right here. And then we are pretty much consolidating within this range between, it's a pretty wide range, but it's a wide range because this is a monthly range. So you're looking at 697 to 672. If we get dropped below 672 on the Qs, we may be in trouble because that's lower than the lows of December. So as long as we hold above December 2025 lows, we're more likely than not to bounce and have a continuation upwards. Or we can stay stuck in the consolidation for a couple of months unless something shakes up the market to cause a push, the next catalyst. So you want to see us break. I want to see us start closing back above 691 is a crucial level for the Qs to start closing back above. That shows we have upward momentum favored. And if we start closing below, which right where we are right now, around 679, if we start closing below 679, I'm bearish on the Qs. That's actually going to be my put level. I'm putting an alert there right now. We get below 679, I am grabbing some puts. That shit is close, boy. These are monthly levels, so let me do the weekly. Let me go look and see what I would enter calls at on the weekly. And honestly, it's looking ugly. Yeah, right where I got this level at, right here. 683.61. That's the top of the weekly level of November 2025. You look on your weekly levels, November 2025 for SPY. The top of that candle is where we are going to set our call entry at. There's a lot of chop that takes place above it, so we gotta be disciplined with taking profit at 685.78, and then 688 for sure. Take some profit and see what happens. What happens when it gets up into the 690s? Because if you see in the 690s on the weekly, nothing but wicks up there. So it shows that sellers are waiting. Sellers have been waiting at 695 for 1, 2, 3, 4 weeks now, 5 weeks. So 6 time may be a charm if we get back up there and test that 695 for a 6th or 7th time. I believe that'll be the time it breaks because we've been consolidating for a decent amount of time now in this price level. So I see us either breaking up or breaking down in the next 3 to 4 weeks, next month or so. We got to keep our eyes open though. But those are the levels for SPY right there. Make sure you wrote those down for calls and put entry. I'm going to put my alert here to call as well. Remember, this is educational information only, not investment advice. You always got to consult your own investment advisor for investment advice. And this is for education and entertainment purposes only. All right? Always do your own research. But these are the levels I identified. And that's how I'm going to rock with SPY. We got Nibius in, we got SPY in. Let me look at the Qs. We were just looking at the Qs. The Qs, if you're looking at the Qs, I don't know why it's not showing any kind of pattern on the on SPY. Let me see something. Okay. So SPY not showing any patterns on the weekly, but if we shift to the daily, you see this whole yellow box of consolidation we just drew. When you shift to the daily, you can see that SPY just put in a triple top. The triple top up here on the daily around February 11th, which is not a good look. And you see at that triple top how much we rejected after that. A triple top means it's tested a level to try to push above it 3 times at this point. And if it's unable to do that after 3 tries, each time the rejection may get stronger and stronger. But to me, honestly, like this rejection is holding this range really tightly. So every time we get rejected off of 695, it comes down to 675, and then it bounces right back up to 695, comes back down to 675. This is almost too clean. I'm looking at this is ridiculous. 695, 675, 695, 675. We just hit 675. Did we hit 675 today? The low of the day. Yep, 675.78 today. We're bouncing off of that. So we go back up to retest 695 again. If we don't break through it this next time, I highly doubt we just remain in that perfect range of consolidation for too long. The breakout is going to come at one of these points. But until then, I say you can take a high risk trade and play the bounce because it's been working. It's been working. Usually it's working. Don't try to go outside of it until it stops working. But right now, you could try to play. This would be a high risk bounce play off of 679. It's holding above the put entry, so I will use 679 as your stop if you're getting in here at 681, because you could potentially ride this wave all the way back up to 695. The levels to look for on the way up on that will be 685 for the Q for the SPY. You're gonna hit some resistance there. Of course, the call entry. I'm sorry, 683.62. The call entry gonna hit some resistance, and then 685, 686 around there. 685.78 is the next level I got up. So I'm not gonna jump in too aggressively, but 683 is close. That'll give you a good range to play up to 695. I think that call entry is early enough for you to make a good amount of money. So you don't have to rush into the call now, but it is playing that bounce again. We can see if that range repeats itself for a 4th time. It did it 3 times already. All right, SPY, I'm watching you. Let me see if Qs did the same thing on the daily. The Qs are in a double top on the day. Really, like the Qs could have put in a triple top. It's just this second high right here didn't get as high as these other 2. So I don't think they call this a top right here. It only came up to what? 627. So we hit in the 637 range back in October 2025. Then we tested that again on the Qs in January. And we rejected off of that level again. We didn't come all the way back down to the bottom where it went before on that first rejection, the 581. So this is a higher low, which is a bullish sign that we put in a higher low on the daily. You look at the weekly. Yeah, higher low on the weekly as well from the last dip. If we get back above, I'm going to set the call entry level on the Qs. We're going to be patient with the Qs. We're going to wait for that 617.50. We get above there, I like the Q call entry. And then we're going to look at put entry is going to be, like I said, it's going to be wide range on the Qs this week. That last week candlestick put in the wide range, so you got to play the range of what the candlesticks give you. You can't just want to come up with your own levels based on what you want to see. Trust and believe, because you may want to say, okay, let me say 615 is a good, or 610 is a psychological level. So let me jump in at 610 or 615. those may have some kind of resistance or levels on them, but if it's not the most recent weekly level, you have a good chance of those levels just being blown right through. So I always look for the most recent week and try to set my levels based off those parameters. Or if we don't have any parameters we could use the previous week, we'll go to the week before and the week before until you find the levels that you could use from the top or bottom wick of that candlestick. Okay. So we got that call entry right there, 617, and then we got the put entry. We can move this right here. We're gonna say put entry to be 5. We'll say 597 pretty much. Q's get below 597. You could look at puts right down, right around there. So knowing this range, unless we have some rapid swing in the market, I know more likely than not this week I'll probably not be trading the Q's. And that's just how it is. You ain't gotta trade everything every week. Some things is not to be traded. And then good old IWM, my friend IWM. IWM has been trying to hold very strong. If you look at the consolidation on the weekly, heavy, very tight consolidation. Very tight. It's between 271 and 260, so $11 range on the IWM. It's been holding within. It really hasn't pushed above. If you really look at the range, is even tighter. If you look at the weekly candlesticks, and you get rid of this high wick up here, we don't pay attention to this super high wick at 271. We really haven't closed any weekly candlestick above 265 since the beginning of the year. Nor has it really closed below 258. So 265 to 258 is probably more the true range on IWM. And that is why 265, we start closing above there. I had that set as a call entry unless you're trying to scout in between. But 265 on the weekly is the call entry. I'll rock with that. 265.70 to be exact. Oh shit. And on the put side, last week, if you look on most ETFs, last week we put in some crazy ranges. Wild ranges. I'm gonna move this put entry up a little bit on IWM. We can move this up to below this week. We pretty much say IWM get below 259.50. I like puts right down there. Once it starts breaking 260, essentially. All right. So there you got some. Where is it? Let me erase these levels. All right. Put those levels out the way. Make sure this target is labeled right. This is the target. This will be like the midline right here. All right. So the IWM levels are in. If you get in that put 259 below 260, you can write that down. Potentially, we'll see right around 255 for sure. It's going to be a level of support. And then you got 250, 280 after that. Womp, womp, womp. All right, let's see what's going on in the market today. Let me bring some news to y'all. Let's see what reports came out today. So we have building permits report that came out today. Durable good orders. It supposed to come out today. Well, I don't see the numbers on here. These came out at. The housing starts come out at. Hold on, let me look at these reports because I want to see what these numbers came in like. Today. United States. You know, today is the Lunar New Year. For those who didn't know, today is the Lunar New Year. So a lot of people out, a lot of countries celebrate today as the official New Year's. I prefer, honestly, myself to spring equinox as the beginning of the year. Just seems right. Doesn't seem right to start the new year in the middle of such a cold season. So today we had not too many important reports come out from what I'm looking at on here. Today's Chinese New Year, right? Yeah, Chinese. Okay, today's Chinese Lunar New Year. I'd say this is when they celebrate their New Year. Okay, that makes more sense. Okay, so today's pretty much a holiday. So I said it's a short week. We had President's Day yesterday. You have the New Year today for China. Is President's Day the same day every year? Did we put it right with their New Year? Do we do that? Oh no, I think their New Year changes with the moon cycle, I believe. Hold on. Yes, Chinese New Year does not fall on the same day every year. It typically falls between January 21st and February 20th because it follows the Chinese lunar solar calendar based on moon phases and the solar year rather than Gregorian calendar. The date usually aligns with the second new moon after the winter solstice. The second new moon. Okay, I thought new moon. Okay, I thought so because I was like, it's not a full moon out, so it's a new moon. Okay, the second new moon after. Okay, after the winter solstice. Yes. That makes sense. The celebration is a 15-day event. That sounds lit. We need to go to China for the Chinese New Year one year, bro. Let me look at tomorrow. Tomorrow reports we got coming out tomorrow. Let me filter this by medium and high importance. Okay, so the housing starts and stuff come out. That report come out tomorrow. Okay. Got some FOMC members speaking, but it's not Powell. It's other members of the Fed. FOMC meeting minutes comes out tomorrow, so that's pretty crucial. You got to pay attention. People going to want to see what they said in the most recent meeting, see how that leans towards the next interest rate cut or not happening, or when is it most likely going to happen. Then we have crude oil inventories coming out on Thursday, along with the Philadelphia Fed Manufacturing Index. So the Philly Fed Manufacturing Index, because these confused me when I first started investing. That is something that measures the rate of relative level of general business conditions in Philadelphia. They picked Philadelphia. Why? Because Philadelphia deals with a lot of import and exports on the coast as well. So I guess they determined that Philadelphia could be a good gauge about how the manufacturing industry is doing. So it says a level of 0 on the index indicates improving conditions. A level above 0 on the index indicates improving conditions, while a level below 0 indicates worsening conditions. This data is compiled from a survey of about 250 manufacturers in the Philadelphia Federal Reserve District. All right, higher than expected readings should be taken as bullish, lower than expected readings should be taken as bearish. So that comes out on Thursday morning. That's the Philly Fed Manufacturing Index. See how bullish or bearish our manufacturing has been over the last, I believe it's every month. And then we have jobless claims. That's a big report on Thursday. Jobless claims gives you the state of employment and unemployment and how many people are filing for are claiming that they have no unemployment right now. So jobless claims is always a market mover. And then we have GDP, which is the overall health, our gross domestic product, quarter over quarter for quarter 4. That comes out on Friday. That's going to be big. And the PCE, core price index, month over month, comes out on Friday. And the year over year for core price index comes out on Friday. So that's a good measurement for inflation to see how much prices are inflating or deflating. Let me pull it right now and give you an exact breakdown. So the core personal consumption expenditure, PCE, price index, measures changes in the prices of goods and services purchased by consumers for the purpose of consumption, excluding food and energy. So that is a major key to this. So I'm sorry, I put this over here for you. Excluding food and energy. Okay, that's a major thing because food and energy tend to either throw off these numbers, consumer price numbers, a little bit in that direction. Whether energy is high for the season based on like it being winter time or a lot of motion and traveling being done, energy costs may have gone up. Food costs may be higher in some categories based on cost of import and export. So in order to eliminate that noise, they just want to know how much the prices of goods and services purchased by us are changing on a general basis. So that'll probably be anything you do as far as getting a service from even a consultation, a financial consultation or tax preparation, all the kind of things. They want to see how much those businesses and services and costs are going up for us as Americans, okay? Not just on food and gas. We always hear about food and gas, but this pretty much deals with everything that you will pay for outside of food and gas. All right, so those are the reports I think you should want to watch out for this week. And I'm going to give you guys a little chart skill to go away with before I get up out of off the live. I'm going to show y'all let me show y'all the orb, okay? Let me turn these off so you're not confused. Maybe I can make that line bigger. Oh, that's so damn skinny. No, I know I can make it bigger. All right. So let me see if I could find one that played out pretty good this morning. Let's go down the list. So the opening range breakout, that's what the orb is. It's an opening range breakout strategy that a lot of people use to play the opening of the market. and see which way the momentum is breaking, and they usually try to play in that direction. And a lot of the times, it doesn't mean a major move is coming in that direction. It just means it's more likely to continue that way for at least maybe based on the company you're trading. You have to know how far that company is likely to move based on that opening range breakout being broken. You can't expect a $5 move on a company that's only $5, because they're most likely not going to move $5. It might be 10 cents, and that's a big move for them on a day. So you got to know what the average move for your stock that you're trading is daily, and you're going to base the way you're going to play the orb off of that average move. So on something like, I know something like SPY and the Qs, they don't move more than, usually on average, more than 1%, 2% a day. So if you get a decent $2 or $1 move after the orb level triggers for you, then you should take your profit on that, because you're most likely not going to get much more of a move in that direction after that. This morning looks like they're chopping people up. The orb, as you can see, I'm going to show you what it is once I find one that I like. Looks like it played out nice. Everything this month looks very choppy. Very choppy. Okay. Well, Coinbase kind of did it, but. Man, what a choppy day. Everything is chopping crazy. All these, and none of these I see candlesticks really closing above or below the orb. Okay, here goes one right here. Aklo. Aklo gave us some orb action today. So on the first candlestick, this is called opening range breakout. So it's going to give you, I have it set it for multiple candlesticks, but you can set it for the time frame where it only gives it to you for the opening candlestick. And you're going to see a green line and you're going to see a little red line form. These lines are telling you that this is the range of the opening of the day. Once you get a breakout of a candlestick above or below these levels, you have a very good chance of a continuation of the price in that direction. Like I said, for how long and how far, that's all dependent upon the company and how much the average move is. But it's letting you know that once this level breaks, like it did right here on Aklo this morning, the orb right here was here. You say something like, okay, based on this orb being broken this morning, I see it's going up to test the resistance of the previous day, or whatever your price levels is. For Aklo, I would say like 67.30, right? So I would say that'll be my take profit on that position. I'll get out at 67.30. I wouldn't push it past there. And it can have a great day and push much further, but if you're just doing an opening range breakout trade, like I said, you're looking for a small move, because you're just looking for the guaranteed up move or down move based on this line being broken. Even if that's $1, depends on how much money you put into your trade, that dollar move can make you a lot of money. So the people do this every morning, and they'll get on here and they'll play this little move right here that we just saw, and it'll go from $65.40 to $67, and someone could make $10,000 off of that move. Based on how many contracts they bought. Somebody could have made $1 million off that move. Somebody could have made $100 off that move. All about the size of the contract you bought, but what you're looking for is that general move in this direction that occur once this orb level breaks, the opening range breaks to the upside or downside. Let me see if I find one that broke to the downside for y'all. All right, so this is one right here. So this is the opening range. So this candlestick right here, this is Pfizer. So Pfizer had an opening range at 27.87 at the top. The bottom of that first candlestick was at 27.58. So once you got to push below 27.58, that put triggers for you to take your opening range put. You take the put, and you got to have your levels in advance of where you know support could possibly kick in on the way down, so you can make sure you take your profit. So for me, I would probably put a support level right here at 27.40. So 27.43, I would probably be out this position. And that would have been a nice ride from 27.58 to 27.40. And like I said, it all depends on the company you trade in. That doesn't sound like a big move, but on a company like Pfizer, on their weekly contracts, that move will probably get you a good 30% return on your contract. It's not every time you're looking for 100, 200%. 30% is beautiful. So take that and use it for what it's worth. That's the orb for y'all. And I will be back on live tomorrow with some live trading. Today was about charting. Tomorrow we'll get on and see what the market's looking like. It's a short week. And we'll get some trades in after these price levels that we set tonight. If you want the price levels, you got to join the Discord so you can have access to all the price levels that I post. Call entry, put entry, take profits, stop losses. Everything is given. Try to make it easy as possible for the Culture Shock community. Because I know a lot of people are just now getting into starting to trade and invest and learn the market. So I don't want you to be intimidated by the learning aspect of it. So let me make it easy as possible for you to follow along while you learn. And as you start to learn and you get your own groove, you'll find out what strategies work best for you, what you're most comfortable with, and you can just grow from there. All right? I don't want you to be with me forever. I'm just a pit stop for you to learn and grow and expand. And then I want you to come back and drop some gems on me so we can grow together. All right?